Hey guys, my name's Jeff. Welcome to the channel. If you've been here before, welcome back. I want to talk with you about a few simple things that you can do to make yourself a much better investor. Now, I think a lot of people think that to be a great investor, you have to pick the perfect stock, you have to time it right, and you need to kind of get lucky in a way. There's this illusion, I think, out there, whether it's the financial media or other people making YouTube videos telling you the perfect 5 or 10 stocks to buy right now. You don't have to be a hero and you don't have to be brilliant. Being super smart does not make you a better investor. One of the main things that you have to do to invest well is not do stupid things. What does that mean to avoid stupidity? I think at the core, what that means is not getting involved in buying stocks if you don't understand what you're doing. A lot of people have bought stocks in companies where they didn't really understand what the company did, but they heard the name, they heard about the stock and the ticker symbol, and somebody said, this stock is going to 10x in the next year, or the growth of this company is going to be incredible, it's going to be amazing, it's going to be massive. And you know, it's exciting to think, if I buy this stock, then I can benefit from this insane growth. But if you don't know what the company is, if you don't know really what they produce, what their services are, or what their products are, or who their customers are and who their competitors are, and if you don't understand that in a deep, fundamental way, then you're probably going to be a disaster over the long term as an investor, because you're going to constantly be whipsawed in and out. You're going to get like whiplash, because you're going to go for this stock and put money into it and it's going to do horribly, and you're going to figure out, do I need to sell it and what should I buy instead? And so you don't want to lose money. And the way to avoid that is to kind of know what you're doing. And keep this in mind, anything times 0 equals 0. And there are a lot of stocks that have gone down 50%, 70%, 80%. Some of them may just go out of business. So you want to avoid those bad situations. Understand what you're doing so you can avoid losing money. Now, some of you may know that every year there's a big meeting in Omaha, Nebraska of the shareholders of Berkshire Hathaway. Berkshire Hathaway is a large holding company. It's a conglomerate run by Warren Buffett along with his partner, Charlie Munger. And they have like more than 70 different subsidiary companies. Companies like Geico and Burlington Northern Santa Fe Railroad, Berkshire Hathaway Energy, See's Candies is a famous one. But they run all these different businesses, and they happen to own huge positions in several big stocks. For example, Berkshire Hathaway owns more Apple stock than any other company in the world. So these are great investors. And they have this meeting every year, and thousands of people come from all over the world. And all these people descend upon this meeting to hear Warren Buffett and Charlie Munger talk about the company. It's kind of like a pilgrimage to some, holy land. You get back to the basics. I'll tell you a little story that kind of underscores what I'm talking about. Last weekend, I went over to some friend's house. One of my friends said, hey, let's go out and play ball. We'll go down to the field. I didn't know what he meant, but he wanted to hit some softballs and practice softball. So we all went out there. And I haven't hit a softball, I haven't hit a baseball in years. And so, I went out there and, he's throwing the ball and I'm there and, I'm going and I'm hitting. And my first several balls, I just like smacked ground balls. I kind of hit really weak shots. They were not line drives. They were not deep home run shots. But, this was practice and it was there for fun. But I noticed like when I was hitting, something was kind of off, which, think about it. If you haven't played an instrument in years and you suddenly try to play, you're probably not going to sound that great. You need practice. Anyway, I kind of remembered back to when I played baseball. I just kind of reminded myself of the basics. One of the things is I have a tendency when the ball is coming to drop my hands a little bit like that. And it's called a hitch, and it's like an unnecessary movement that, unless you're really strong or super talented and you can get away with these kind of bad habits, it's not going to help you as a hitter. You really want to keep your body still and your head still so that when the ball comes, you can immediately start your swing. So this is just an example of a basic. I brought myself mentally back to the basics. Now the best athletes, if you're talking Tom Brady, Tiger Woods, or Roger Federer, Rafael Nadal, Novak Djokovic, these guys spend a lot of time working on the basics. You just don't see it. When you see the game, you're just seeing the very tip, the very end of the iceberg of performance after all of this practice leading up to the big game. But these guys, you know, in spring training for baseball, at the beginning of the year, before things get started, they spend a lot of time working on the basics of, you know, hitting that ball, whether it's a golf ball, baseball, shooting the basketball. They work on every part of their mechanics to kind of fine-tune things so that when they're in games, they don't mess up. Now you may wonder, why am I talking about all this sports? But it really does tie back in to investing. So what I think the Berkshire Hathaway annual meeting is really about, being in the presence of someone like Warren Buffett and Charlie Munger, is it just brings you back to the basics. It just kind of grounds you. It gives you a solid foundation. If there are 20 or 30 or 50 stocks out there that you follow on a watch list and that excite you, and you think, you know, I'd really like to invest in this, and I like to invest in that, and I should buy some stock here, and I should get some cryptocurrency here, and I was thinking of getting these like small cap stocks, and what do you really know out of all those things? Like, are there any where you have an advantage? Because if you're buying a little of all those things, you're kind of admitting that you don't really know any one of them really well. Just spend some time figuring out what your advantage is, and also figuring out what your basics are. And if you don't know them yet, that's okay. You just need to learn more. You just need to read some more, watch some more videos, figure out why you're investing and what it is about your life, about your job, about your education, about your own experience in life that helps you to understand some part of business or companies so that you can be better at understanding stocks. Because to succeed in investing, you don't have to understand 10 things or 100 things. You can just understand 1 or 2 or 3 stocks, which is, you know, contrary to what a lot of you're told out there, is that you have to, you know, diversify and own everything. Well, if you don't really want to spend the time to understand, then owning a broadly diversified collection of stocks makes a lot of sense. And for a lot of investors, just an index fund or an index fund ETF makes a lot of sense. But if you're watching this and you're one of those investors who wants to do something beyond the index, which is understandable, then you need to figure out where your strengths are. So getting back to stock investing basics, I'd say that what I'm really reminded of when I go to that Berkshire Hathaway annual meeting or when I watch it streaming is to have a long attention span, and there's really no big rush to jump in and buy stocks right away. In fact, I think some of the best investors take their time and they're really patient. When you finally decide, you know what, I want to buy this stock, it's kind of like in baseball, where you've spent your time, you've worked out the basics, you're focused, you're calm, and then when you swing at that pitch, when you swing at that investment pitch, you swing with all your might. I'm so glad that you've watched this video. If it's been helpful to you, please consider liking this video. And if you haven't already subscribed to the channel, subscribe, and that way you will get a heads up when I make new videos like this. Look forward to seeing you in the next video.